all these rejections from the middle Bollinger Band.
Resistance we're going to need.
If you actually see here, we get a
And we'll look for a healthy higher
I
low.
would not
don't have
be
the
convinced
full
to
macro
enter a long trade.
Howdy crypto friends, let's talk about some stuff and then we'll look at Bitcoin, Ethereum, BCH, and BNB. So first I want to point out on Twitter here, Jake Shervinsky, and his handle is @JShervinsky. He puts out a good tweet revolving around the ETF and the SEC. So we had a headline come out today that was a little bit misleading where it says the ETFs were delayed and then it, in the bottom it says this is not the ETF everybody's talking about. So there's more than one ETF being proposed and being ruled on right now. And so essentially what Jake is saying is that the odds that the SEC kicks the can down the road for delaying this decision is most likely. So he's saying they can and probably will delay its decision until February 21st, 2019. But they have to do it one step at a time. Or maybe not they have to, but they will. So essentially it's a 45 delay would be first, and then a 90-day delay, and then 60 more days after that. So he is saying that that's the most likely scenario to get those delays. And he's also saying that the fact that this ETF was not delayed today doesn't mean anything because those other ETFs reached their deadline and the one that we're watching has not reached its deadline yet. So what this does to me, this is the middle of the road scenario. Obviously the bull scenario is we get approved. The bear scenario is we get rejected. This is middle of the road. But what this does do, in my opinion, is it psychologically kicks the can down the road and it allows the carrot to dangle further. So what I mean by that is we have this sentiment where we were looking for Bitcoin to be the leader over the last couple of weeks because of the ETF sentiment, because people were going to be less likely to take profit as we head towards August 10th. But if we get the delay, that dangling carrot for the bulls is just going to go 45 days down the road. So while if we get a delay, depending on the price action heading into August 10th, if you give me this daily candlestick right now, and this is August 9th, I would say absolutely, if we get a delay August 10th, we're going to see a sell-off. It's not going to be a huge all-out dump, but we will see profit taking and we will see consolidation. It all depends on the price action heading into August 10th. If we're pulling back heading into August 10th, I wouldn't expect as significant a bearish reaction if we do get a delay. So looking at the weekly time frame, we're looking for a lower high compared to 10,000. Just visually, that's what I would anticipate to happen. In order to change this weekly trend, we likely need a lower high compared to 10,000, a higher low compared to 5,700, and then break the lower highs. So this could keep us within this tightening range while we wait for this decision. 45 days from now would be 5 weeks. So I would expect a break by the first delayed date, which would be, it's even more than 45 days from now because we still have a couple weeks until August 10th. But essentially, we're going to be looking for a tightening weekly range. Unless there's a catalyst to lead to a break in 10,000, I would be very surprised if the 10,000 break would occur on this move. It would be extremely bullish if that does happen. Not necessarily in the sense that, if we break 10,000, we're going right to 14. Just in the sense that if we break 10,000, we're going to look for a higher low and a higher high on the weekly after that. So at this point, the most likely scenario is a lower high compared to 10,000 and then healthy consolidation to form a weekly higher low. The volume is beautiful. The bulls are absolutely loving this volume. The fact that we got increasing bull volume and the fact that this volume is matching the initial bull break is very encouraging. And if we look at the weekly time frame, this is just Coinbase, but Coinbase last week was the highest volume that we had seen since April 23rd. So essentially a couple months of the highest volume, and we're on pace this week to pass that. It all depends on what the volume looks like when we do consolidate on this daily time frame, but we're on pace to pass that volume, and showing increasing bull volume would certainly be a good sign overall. So again, bottom line is regardless of ETF and anything, I would say just looking at this pattern and seeing this pattern play out on stocks hundreds of times before, I would anticipate a lower high and then a higher low on the weekly as the range continues to tighten. So my game plan going forward for my swing position, which again, I cannot stress enough, I usually don't do this in terms of swinging the position, and I'm adopting a newer strategy, and I'm going to continue trying to shift my game over the coming years to more swing trading, less scalping. I've been a scalper and acting on short-term moves that requires a lot of time at the computer. I am going to transition away from the computer at some point. So I'm looking to sharpen my skills swing trading, and at this point, I cannot tell you how convenient it has been to have this position and not have to worry about anything. No FOMO, making great money on the way up, No, crazy risk in terms of having my entire stack in a position or anything like that. So I'm just slowly walking up stop losses. At this point, my stop loss is under 7,200, this daily high or low, and I'm going to move it up shortly because a few weeks ago, maybe a week or two ago, I just said, visually my target is low 8,000. So we've hit my visual target. Doesn't mean we can't see continuation from here, but it does mean that I'm going to be a little bit more cautious with locking in my profit, and then I'll worry about, reestablishing a position after that. So where we stand, there's a lot of people that are still feeling FOMO, and there's a lot of bulls that still want in on this move. So the best entries that we've been pointing out, the 15-minute oversold bounces have given 3 great entries over the last week. That's when you want to be entering in overbought, or I should say oversold conditions, because the bulls are buying those dips. The bull breaks, this most recent one saw some really nice follow through, but other than that, the bull breaks have not given us great opportunity. So entry on consolidation is ideal, and essentially what's happening is the exact opposite of what we were looking at a month ago. So a month ago, we were looking at the 15-minute RSI, or I should say the 15-minute exponential resistances driving the price down. Look at the bulls holding it here. We were looking at the hourly exponential moving averages driving the price down. Here it is acting as support again. So just like what we would do on bounce attempts, when we get over the 15-minute exponential resistance, we zoom out to the hourly. When we get over the hourly, we zoom out to the 4-hour. We're doing the exact same thing with support. So right now we're losing, well, here's the bulls trying to hold on, but we're potentially losing the 15-minute exponential supports. If those levels are lost, we zoom out to the hourly, and we watch the hourly exponential supports. If those are lost, we zoom out to the 4-hour and look at those supports, which are still holding. So we're seeing bulls buying the dip. We're seeing the bears push the price down but not get follow through. The bulls, I was saying for a while, we need the bulls to punch the bears in the mouth. And they did that overnight last night by seeing a bunch of shorts open on this action right here, on this 15-minute time frame. Tons of shorts opened here, not tons, but a good chunk of shorts opened, and then the bulls trapped them and put them in a situation they did not want to be in. So right now, I'm looking for an hourly equilibrium. This is the setup that I am watching. I will probably exit more of my position if we get a bear break of this equilibrium. So we've got our high of the bull move, our low of consolidation is 81.14. We just formed a lower high at 83.11, and we're looking for a higher low compared to 81.14. So if we get this tightening equilibrium, as it does appear to be forming, and then a bear break of that, I will exit a portion of my position, maybe half of what I have left. And then the 4-hour time frame will look to pull back and form a higher low. So that's just me remaining protected because we hit my target that I visually had initially back before we even broke 7,000. So that's where we stand. 4-hour inside bars, absolutely worth watching because we're forming hourly 4-hour inside bars. We know that the hourly chart is giving us that equilibrium, and we are looking for a break of this equilibrium sometime within the next 4 or 5 hours or so at the latest, I would say. So other than that, bulls are holding on just fine. They've had a great day. Again, same thing as last time. We can absolutely see daily consolidation, and the bulls can remain in full control. I would say at this point, for the bulls to remain their healthiest, they wouldn't want to give back more than, we could pretty much use previous resistance, now support. Anything more than 78 would start to say, all right, that's a little bit more than the bulls would like to give back. Let's call it 77. And again, this is just visually. If I'm looking at a strong uptrend, what do I want to see the bulls maintain? That would be a higher low I'd like to see the bulls maintain. They're still in full control as long as we see declining bear volume on consolidation. That's just fine for the bulls. Again, initially my plan was to hold my position as long as daily higher lows are maintained. But now that we've hit my target, that's why I'm changing my game plan a little bit to just ensure that I lock in another portion of profit, because I did take an initial third of profit on this initial consolidation, and I'll probably take another third of my initial position on this next consolidation. So that's where we stand. ETF still on watch until August 10th. And again, the more we run up into August 10th, the more likely consolidation and a little bit of a sell-off will be, in my opinion. Bears will be ready to jump all over that. But other than that, again, this volume is very impressive. And what we can be looking at is April. We have a really good example of April where we saw the same thing. So we saw a month of bounce. It was just a lower high on the weekly. And here we are seeing a month of bounce and potentially just forming a lower high on the weekly. What marked the top back in April? And the good thing about us doing these videos every day here with the chart guys is that we can watch the video. You can go back and find what was the red flag and watch the video on May 10th. and say, what was Dan saying May 10th and what was going on? Because that's when we lost the daily higher low pattern, and that's when we were speculating that our weekly lower high might have just been set because we lost the daily higher low pattern. I'm watching the volume on this bull move and comparing it, and the bull volume on this move compared to April is a bit more impressive. It's very similar in the sense that we got that brief consolidation and then continuation, but there is a bit more bull volume behind it. You can see our second leg up on this bull move. The highest volume day that we saw was up at 16,000, and here we are hitting 16,000 right now. So it is definitely comparable. And I'm going to be looking for clues, a loss of the daily high or low, and we'll be confident that our weekly lower high has just been set. That's a ways away off, though. We still have another daily high or low to form before we even think about that. So you can see once that top was hit in April, we pulled back for 4 days, attempted a higher low, got no follow through, and then the bears took over. So again, we have a perfect example. You can go back and look at clues. You can look at the 4-hour time frame and see what it looked like at that reversal and trend change and apply that to what we're seeing right now. Another thing a lot of people are looking at is, saying, well, look at the Bitcoin longs. We're seeing tons of Bitcoin longs liquidate and a lot of profit taking. Yes, absolutely, that is the case. But it comes to a point where you want to keep things simple. And if you're looking for all these, little clues, it's good to notice these little things, but you also don't want to go overboard in the sense that, people that are always looking for divergence and pointing out, well, there's bear divergence on this time frame, in this time frame. I don't care what bear divergence is saying if we're in an uptrend. The price action is king no matter what on everything. So if we have an hourly higher low pattern, just play that. And it doesn't matter if there's bear divergence. Yes, you can know, okay, maybe we're going to pull back, but you're going to know that when we lose the higher low pattern. So for me, it's very simple. Yes, I can recognize that the Bitcoin longs are liquidating, but if we don't lose the hourly higher low pattern, I don't care about that because it doesn't change the game plan whatsoever. So I'm sticking to price action and key levels and trends as my most important factors. Those other things are very secondary. Again, it's worth noting if you're sitting here and not doing anything, you might as well be checking things out and looking for little clues. But again, you don't want to go too overboard. Keep it simple. There's no need to make it, overly complicated. A lot of people that watch us on this YouTube channel like us because we keep it simple with price action as king. We're not looking at fibs and Ichi clouds and all these different things. It absolutely works for some traders. I've found a style that works for me, keeping it simple and keeping price levels as the most important factor, equilibriums, and all that good stuff. So that's what we got to watch. I made some notes here. Another thing, just psychologically that's happening with Bitcoin and this price action, it's almost a self-fulfilling cycle in the sense that, I see this happen with stocks. And an example with the Canadian MJ space is you have a company, APH, and there's rumors about an alcohol company getting a position or a partnership or buying out or whatever it is, some collaboration. So because of that rumor, you start to see price action where APH, comparative to the other names, started to see a little bit more of a bullish correlation. So there's this, what I mean by a self-fulfilling prophecy is, we have the initial rumor and bulls start to buy that rumor, which affects the price and the price sees some strength. And the more that happens, the more people say, hey, maybe this rumor is true. And so they buy. And so that pushes the price up. So this is the same thing that I see happening with Bitcoin here, regardless of whether or not the ETF is going to go through. The price action here is making retail traders more confident that the ETF is going to go through because the price action is reflecting what would potentially happen. So that is something I'm keeping in mind as well. We don't know whether the ETF is going to pass or not, but this price action, I promise, if we were not seeing this, if we were back here and not seeing a trend change and you did a poll of whether the ETF is going to pass or not, the numbers on whether you did that poll a month ago or today would be significantly different, with the only factor changing that being the price action and where we stand with, euphoria still in the sights of the bulls compared to despair just a month ago. So keep that in mind as something that is psychologically affecting this market. And again, it's going to be all about the ETF, in my opinion, until August 10th. And if we kick the can down the road for 45 days, like I said, we'll see a sell-off, in my opinion, but it won't be massive. And maybe that's going to be the catalyst for a lower high on the weekly and a pullback to form a weekly higher low. So Ethereum, on the daily, the bulls got some nice follow through. It was a solid day, individual day. But again, you compare where Bitcoin is standing compared to its July 18th high. And if ETH were comparable, ETH right now would be up in the 570s or so. So we're obviously still way behind. There is correlation there. The correlation just continues to favor the Bitcoin bulls and the ETH bears. So resistance is 483.92 and 515.88. And in terms of support, we have 4-hour higher lows to be watching, and actually nothing really clear. Hourly higher lows, I'm looking at support of 468.77 as the most important short-term level, and the bulls are attempting to form a higher low here. You can see the tightening range on the hourly, similar to the Bitcoin hourly equilibrium that we're going to be watching for. But again, we just look at the ETH BTC chart, and as long as these charts are in daily downtrends, I am not interested in any other coins. And we're very clearly not even close to doing anything to change this trend. So when we have short-term oversold bounces on these 4-hour candlesticks, that's when there's these brief periods of time where ETH is stronger than Bitcoin. So brief day trades, I've said this in previous videos, brief day trades, the altcoins can absolutely see more bullish moves than Bitcoin can. But if you're looking at the daily chart and swing trading, it's not even comparable. Anything under 632 is a lower high, and we're likely going to just bounce and set another lower high, even if we do bounce from here. So the outlook is not favorable for any kind of trend change. There's no reason to fight this trend at this point, although I would anticipate the weekly support of 536 to hold. It would be a big red flag for the ETH bulls if this support does not hold. The bulls need to form a weekly equilibrium for this ETH BTC chart. So that's another thing to be keeping an eye on, this weekly chart overall. BCH USD. So again, today's gains more significant than Bitcoin, but overall not comparable. So we have key resistance, the high of the move, 88.19. If we get a lower high here, we'll have a 4-hour, and it's not really visible on the 4-hour clearly, but I would be watching this tightening range of a high, a low, a lower high. If we see inside bars break bearish here, and then we'll look for a higher low compared to 773.50. So a tightening range essentially, if we can't break the high of the bull move, and we pull back from here with some consolidation, and that will give us a daily tightening range to be watching with our high, low, lower high, and then we would look for a higher low. So that equilibrium might be most visible on the daily chart. It all depends on Bitcoin, in my opinion. If Bitcoin gets an hourly equilibrium bull break, BCH is likely going to break 888 for a higher high. And if we get an hourly equilibrium bear break on Bitcoin, we're likely going to pull back and form this daily lower high and continue to see this range tighten. So again, we look at BCH, BTC for the comparison of where it stands relative to Bitcoin. And on a day like this, absolutely, the short-term action, we can see BCH see some more strength. But the daily trend very clearly is still bearish. It's not changing anytime soon. So sticking with the trend as our friend, which favors the Bitcoin bulls still at this point. BNB USDT, this is a very key weekly support continuing to be tested and continuing to hold. It's this low down at 1161. And we have that support, and we bounced off of 1164 right now. So it's essentially a weekly double bottom. The bulls really want to hold this level, or we lose the weekly uptrend, which has been holding for months and months. The daily chart, you can see the bulls here trying to cling on to this support. We need a break of 1249, and then we're looking all the way up at 1390. So bulls need to start breaking some of these resistances and follow through with these bounce attempts. We did not get any follow through on the last bounce attempt. It was a bear flag that dropped to a lower low. The only hope the bulls have is that we did not follow through on that bear break. It is a solid bullish reversal candlestick, and we're looking for some more follow through to save this weekly higher low pattern. So that's the most important support in my opinion, and I would expect a good amount of liquidating, or I should say stop losses triggering if we do break that level. And at this point, not going to see a clear daily trend change unless we set a lower high compared to 1390 and then a higher low and then break the lower high. So this is another one where the daily trend is not likely to break anytime soon. So have to be patient and have to wait for that trend to be confident. So that's where I stand on Bitcoin and everything, this hourly. So that lower wick of bulls buying the dip. And we are going to look for a break of either 8190 or 8311 sometime in the next few hours to dictate momentum overnight, whether we get another move up or whether we need to see 4-hour consolidation to form a higher low. All about these 4-hour inside bars as well. And the hourly time frame can give you a little bit more detail than the 4-hour inside bars, but if I were, not at my computer and I were using the alert system, I would say, let me know when the 4-hour inside bars break, and it'll tell me if it's either a bull break or a bear break, and that will dictate momentum for the night. So one thing that I've been talking about is the different market cycles Market cycle number 1 for Bitcoin was the raging bull market. 5-minute oversold. If you bought 5-minute oversold, you're a winner. That was pretty much guaranteed money on the way up on the run to all-time highs. Then we had 4-hour oversold climaxes, and that's an alert that takes into consideration not only the RSI on the 4-hour, but the volume as well. There has to be volume with it to give that climax, and we had beautiful bounces. Can't tell you how significant the profit was from December all the way through February on those bounces. It was just like an ATM machine. And after that, we then started to enter the third market cycle where we had the slow bear fade, where we had bear flag after bear flag, very weak bounce attempts, no follow through. And the greatest indication there was obviously to be playing bearish. But in terms of, I'm always looking to identify market cycles by the indicators that are useful in trading, and they continue to change. So 4-hour oversold is not doing us any good right now, these climaxes, and we've switched it to 15-minute abnormal volume, giving great signals, and 15-minute oversold. So again, just to look at this 15-minute oversold, if you scroll back since this breakout started, every single time this 15-minute RSI touches 30 or just breaks below it, and at this point we're looking at about 4 or 5 times, we've seen follow through, and that has been the most perfect entry that you can make in that time period. So we've seen beautiful follow through every time. So 15-minute oversold is the working indicator right now, and so is the 15-minute abnormal volume. And we pointed this out with the alerts a few times, where it's the 15-minute abnormal volume. It was detected earlier this morning at 7,755, and then we saw the bull breakout follow. And it also indicates when we're getting pretty extended to the upside as well. It fired off up here before we had consolidation in the 8,200s as well. So again, those volume climaxes work to signal the potential bottom, or the signal to the potential start of a move, as well as when the move is getting pretty overextended. Something else to be watching is the 4-hour overbought climax, because it's the short-term time frames that the RSI is getting really extended. And just like the RSI wasn't a great indication for buying of the dip the last month at the end of that bear cycle down under 6,000, the overbought RSI isn't a really good signal to be looking for bearish entry on the 15-minute time frame, on the shorter term time frames. We can see here on the 15-minute, the hourly RSI, the 15-minute RSI, I should say, got up to 85. The hourly RSI got up into the 87s. So the shorter term time frames are not giving us good signals, but the 4-hour time frame, we had a overbought climax signal to initiate this consolidation, and we haven't signaled it again here on the second move up. The RSI did not get high enough. So again, what I'm always doing is going back and back checking what these alerts are telling us and saying what are the best indicators to use in this current market environment. And again, it's just going to change again, which is a reason I don't use bots. And I could spend a lot of time trying to program bots, and I have no doubt that I would get some that work really well. But as soon as the market cycle changes and those indicators that worked really well for a month or two, they're not going to work anymore. And then it's right back to the drawing board trying to reprogram this bot. And I think that's our greatest advantage as humans and traders, is the ability to, on a dime, switch our perspective and to switch the indicators that we're using. So another one here for, let's see, Bitcoin. This is the 4-hour overbought climax. So it's signaled at 7,400, and then we consolidated for a couple days, forming that bull flag before the second leg up. So the takeaway for me from these alerts is 15-minute oversold has been great. 15-minute abnormal volume has been a great indication before the price action shows up. And 4-hour overbought RSI climaxes have been giving a signal that consolidation is likely coming. So, we also have the beta version now live for, if you're already an alert member and you want to try out that new beta, email alerts@TheChartGuys.com and we'll set you up with that. And that's where you get the alerts right on the chart here, inlaid on the website. So that's where we stand going forward, all about hourly equilibrium. And we might not have formed our hourly higher low just yet. So I gave that 81.90 level. That's a little bit premature. I'm still watching for the higher low compared to 81.13, and I need to see a shift on the 15-minute and some follow through for the bulls to be confident that our hourly higher low has formed. So I'm not confident the higher low has formed. I just know that we're looking for a higher low compared to 81.14. So at this point, 81.90 is not the stop level that I would use. Hasn't proven itself as our higher low with enough follow through just yet. So that's what I'm keeping an eye on. We can see the RSI levels cooling off on the hourly, the 4-hour RSI cooling off a bit. And if we get these inside bars breaking bearish on the 4-hour, some healthy daily consolidation is likely coming, and a daily inside bar will be a potential setup into tomorrow. RSI on the daily is over 70 for the first time since the all-time high. That's notable as well. And again, the bulls are proving it with volume for me for now. And we'll see when we lose the daily higher low pattern. That's when we're confident our weekly lower high has been set. So if I'm a swing trade bear, I'm just waiting for the daily higher low pattern to be lost patiently. Thanks again. I hope you all continue to do good things. Let's see, what do we got out there? I got one more video of Nerdbird. I dug up some lost footage, some very rare Nerdbird footage, but that's all I got for Nerdbird footage, so gonna have to get something else. I think there's some flamingos around here in the Keys. I gotta find them. And I hope you all have a good rest of your day. I will see you tomorrow. Congrats to the bulls. Stay protective. Establish your game plan. Are you using the daily higher lows? Are you using the 4-hour higher lows? Where are you going to take profit? Where are you looking to add? Have that all established and written down, ideally. Get out of your head. That's the bottom line. Whether it's your own technical analysis, write it out. Again, I've said this many times. The biggest leap forward that I took in my independence as a trader and technical analyst was starting to write down my own analysis and trying to emulate what my mentor was saying. You know, what would he say looking at this chart, but writing it down. See ya.